Morning all, how are we doing? Morning Christian, Michael, JC, Mac, Martin, Wayne, Gregors, Ryan, how are you doing? Happy Tuesday. Good news, unemployment rate's gone down in the UK. Woohoo! By 0.1%. Morning Neo, Tom, Sarah. So we just had that news come out this morning at 7 o'clock. 16,000 on a forecast of 20. So we're forecasting it to go up, which it did, but not as much as they expected. So not a massive move off of that, really. I was just looking at all the pound pairs. We dropped already on the pound New Zealand, but New Zealand's had a bit of a rally overnight. But yeah, a bit of a spiky candle on it, but nothing exciting. So, Swiss franc's rallying. Big move on the Swissy going on at the moment. Fairly big. So yeah, so nothing particularly exciting there. Morning, MD. Gold re-entry? I don't know. Don't trade gold. So other news today, we've got the CPI figure this afternoon for the US. So this is the first big news event this week to kick us off. So the CPI is obviously the inflation figure for the US. So this is the core driver for interest rates. So what we want to see is this being as stable as possible, stroke dropping. That will reduce the US dollar. So the forecasts at the moment are for inflation to have gone up ever so slightly month on month. And yearly to have come down ever so slightly. So I don't think we'll get a massive deviation on this, but you never know. But obviously this will potentially have a big impact on the US today. So depending on how big the deviation is, obviously that will depend on the size of the move. And then the results of this will impact tomorrow's FOMC statement and the Fed fund rate tomorrow evening. So, yeah, big potential moves starting today. So the week of chaos kicks off this afternoon at 1:30, and then it's non-stop basically all week until until Friday afternoon. So we'll see what happens. But other overnight news, I didn't see an awful lot overnight, apart from the Japanese PPI figures coming out, which were slightly bigger than forecast. So that's positive for the yen. But nothing else exciting really going on overnight. So not a lot of movement. No ADRs today to look at. Nothing's hit the weekly ranges yet at all. So nothing exciting, as you can see from the New Zealand dollar Swiss on the screen. Just going sideways. Nothing going on anywhere really much at all. It's crap. So yen's had a little bit of a rally this morning, ever such a slight one. In fact, it's dropped against New Zealand. So the New Zealand's been the most powerful thing overnight, really, which hasn't really moved much. So you can see we're just having a slight turn down. So all these yen moves, potentially yesterday was the peak of the pullback, starting potentially next leg down, running into the news next week, obviously, which is what the market is expecting next week, for them to say, we will not change our interest rates. So one of two things is going to happen. They won't change the interest rate, which will be positive because it means they probably will in January, or they will change the interest rate, which is positive. So very little chance of negative news on the yen next week. So the market should start buying into the yen in preparation for next week's move. But we'll see. This market is absolutely crazy at the moment. Could do anything. Morning, Virginia. Morning, Franco. Morning, Amy. So yeah, that's ADRs. There's nothing to look at. RSIs, there's nothing to look at. As I said last week, this week is absolute chaos, and the market's not really going to move on anything but news. So I wouldn't expect to get any RSIs or ADRs today until we get some news coming out. So it's just a case of sitting tight and waiting for the news this week. Nothing we can do. It's why bankers tend to take this week off. So DAX yesterday, another bull day. it's not stopping. It's not stopping. It's just not stopping. So when it does decide to stop, we're going to have the mother of all pullbacks on this thing, fast and hard. So when it's going to happen, though, don't know. There's no upside targets now. That's it. We're out. We're at the all-time highs. So, yeah, it's just a crazy, crazy, crazy move. So today we've got, we had a slight gap up situation, which has been completed. So we'll just wait and see what happens at the open. I'm not expecting massive things really off of anything today ahead of that CPI figure, because CPI drives the US dollar, which drives the stock market, which is linked to this. So unless we've got any big news, which means they want to sort of drive a load of European stocks this morning, I wouldn't expect a massive movement, but you never know. So where we are today, obviously, if it breaks to the upside, sky's the limit. You'll be looking just for an ADR hit. If it breaks to the downside, we want to concentrate on yesterday's low. We have got that previous day's high, which is Friday's high, which is last week's high, right in the middle of that propulsion gap. So there. So if it breaks to the downside today, you've got potential support bounce there. We've got the propulsion move out of this accumulation from yesterday as well. So other than that, its downside is yesterday's low. So there's three major points to the downside potentially for bounces today. So we'll see where we go. We've got 2 minutes to the open. That's it really today. There's not a lot else to discuss. It's going to be one of those weeks this week. It's short streams, basically. Either the DAX, if the DAX rallies and does a lovely big target hit quickly, that's it. There's nothing else to discuss. There's no point in looking at any FX pairs at all, because the entire week is driven by interest rates this week. So everything is literally, we've no idea where anything's going. It'll all happen this week at some point. So you look at any pair, it's a case of, looks great for a long now, but we'll find out on Thursday what happens with the euro rate. We'll find out what happens with the New Zealand unemployment. It's just like finger in the air stuff this week, or GDP rather for New Zealand, Aussie unemployment. Right, we are pushing down at the open. Might be tricky to get on. Depending how fast this goes, we're closing at the low pre-market. We've got 10 seconds. Always tricky getting trades on when the market is pushing hard pre-market. There we go. Let's see if we get it. Yeah, there we go. Okay. So downside target, obviously, we're selling directly into support here. That is that second level, which was the accumulation break we looked at. That's the first propulsion gap on the hourly chart after yesterday's move. So that's where yesterday's move started from. So we know there is going to be potentially some support at that area. So if we do break down, I'll be watching price action carefully there. But that's your real downside target today. And certainly looked like it wanted to go short pre-market, didn't it? Morning, Kennelly. Morning, Amy. Amy? Brian, even? Sorry, I was just reading Amy above. Not a lot of volume today. So yesterday it ended up break even. It's crap yesterday. So I basically a break even. So the DAX, there was no trade on. The NASDAQ, I got the break straight to target and then stopped out in the second half. The Dow was a profit that hit target, and that one got hedged. So it was basically a break-even day yesterday. It's just no volume at the minute, so can't get outside that inside that opening range market. Okay, so your 5-minute range today so far is going to be inside the pre-market. I'm not holding out much hope. 3 a.m. can't sleep. Why not trade? Hey, why not? I opened an account with XM Global yesterday. New broker I'm trying out. Just trying their demo at the moment just to see see what their execution and everything is like, but just wanted to see what the FTSE's doing. Oh my God, they don't allow micros. Not using XM Global. There we go. That's the end of that one. Really? You don't allow micros? Oh my God. Didn't know that. Okay. All right, well, that's scrap that. I'm not using XM Global. No volume on the FTSE either today. No volume. One of those days. Thanks for subscribing, Gary. Welcome aboard. It's not moving, is it? Okay, so 30 seconds to go. There's your 5-minute range. Whoop-de-doo. So it's either going to be a very, very slow grind today or sort of basically yesterday. Look, it's going to be yesterday, I think you'll find. So targets nice and tight. I'll be watching that area. If we can get that, I think I'll be happy today. If it breaks short, it's got a break yet. Where is the Christmas merch? I don't do merch. My merch store's not working. There should be a merch store here, which I made as a joke with the kids, but it's not there. And I can't figure out how to turn it back on. So I've given up with merch. I just got this done for myself. Fun. But yeah. No, not doing merch. I've got 70 people in here. I think you need a good 500 at least live streaming before you can even entertain merch. Have you selected micro chart on that broker? i.e. MNQH 2024? No idea. Don't know what that is. It's a CFD broker. It's not stocks. Not futures, rather. There's only one cash. Got futures. Futures is obviously single contracts, so they just don't allow micros. button. I assume they allow micros on FX. Yeah, so you got micros on FX. Gold. Huh? What? What's wrong with this thing? This thing keeps changing its mind as to whether or not you can go in tens or singles. That was going in singles a minute ago. Now it's going in ones. I got money in there. Yeah. Doesn't even work, does it? Nah. Not using XM. They've gone. No use. Right. DAX isn't going anywhere. So there's your 5-minute opening range. So if you're using the ORB EA, there's your 5-minute ORB. There's your pre-market 15. And there is your current exciting, explosive movement. Load of rubbish. Morning, Rajiv. Micro chart for futures. Futures is single contracts. You can't trade micros on futures. All futures is CF. It's not. Futures is single contract only. Always is, always will be. I was hoping for a stuffed Captain Hedgehog. Sorry about that. Thanks for subscribing, Graham. Welcome aboard. I think if you right mouse. Oh, yeah. If it doesn't work in demo and it's that complicated to figure it out, there's something wrong. It's either something wrong with the account or, I mean, it advertises micros on their website, but obviously you've got to have a different account type, I guess. I don't know. I chose the cheapest one, basically. But tick value 0.01, tick size 0.01, contract size 1. Can't trade anything but minis. Doesn't allow anything but minis. I can't sell. So yeah, you can trade micros on FX. Rubbish. No use to me if I can't trade micros on indices. Having no luck with the SIH today. On UK 100, it only took 1 trade long, and there is no other long order pending. The opposite, there are 2 pending short orders. Don't know why it would do that. Trade micro futures. Yeah, no, sorry, Martin. What I mean is you can only trade single contracts. Yeah, there's 2 different sizes of futures contract, but they are all single contracts. You cannot trade a 0.01 futures contract. If you can, it's a CFD. It's not a futures contract because the Chicago Mercantile Exchange does not allow anything but contracts. You can only minimum purchase size is 1 contract. That was XM Global. I thought it said on their website you could trade micros. But you can't. MX Global. No, that's not what I typed in, is it? I did. XM. I don't want to go to the members area. Just go to the website. Oh, it's because I've chosen the XM Ultra Low Micro account. I need the XM Ultra Low Standard account, apparently. Or the Zero account. I make it so complicated. Just have an account. DAX. Oh, almost tried to go short. Look, there's no volume today. So I'm just going to let this play out and see if it triggers a trade. If it does trigger a trade, we'll see if we can get 1 hour out of it. There's nothing much else to do today. It ain't moving. Morning Post. A friend just got flipped from MT4 to ACT. Got flipped from MT4 to ACT platform. What's that? I've never heard of that. They changed it on CME. You can now trade micro futures. What? Morning, Yoko. Right. This ain't moving. So if it does move, I will go with it. If it doesn't move, I won't. The FX market basically today is just going to stay in rotation until 1:30. So we won't really go anywhere today. Euro CAD is still the only position I've got on, which I'm holding. It's not going anywhere. Hasn't gone anywhere for 6 days now. So just waiting basically for some catalyst to kickstart this market at the moment. It's just not able to get going. And I'm not surprised because obviously we've got major fundamental news all week this week. So we've just been sitting in rotation for the last week waiting for, apart from the yen obviously, but waiting for the news. So as you can see, every pair I'm flicking through, we're just sitting in ranges at the minute, waiting for the news events to see what is happening with interest rates. When they come out and say nothing's happening with interest rates, we will probably sit there until January. So there's very little to look at today because obviously there's nothing extended, nothing stretched, no opportunities to trade. We're just sitting waiting for news. So 1:30 is when CPI comes out. So we'll be looking at basically movement at 1:30 on the US. Depending on what the deviation is on those figures, we will either get a decent move or just kind of a whippy move up or down or both, just to clear the decks basically. They've got the bond auctions later. Occasionally the bond auctions do liven the market up a little bit, but I would suspect ahead of FOMC, probably not today. So if we don't get any movement off of CPI this afternoon within kind of an hour of that coming out, we're going to be waiting for FOMC tomorrow. So we've got PPI, the GDP figure tomorrow. GDP is not really doing an awful lot at the moment because it's kind of a byproduct of inflation and interest rates at the minute. Usually when we've got stable interest rates, GDP is more impacted, but at the moment your GDP is dependent on how you change your interest rates because the economy is changing on those at the moment. Businesses are performing based on them. So it's US PPI basically tomorrow afternoon, but that's unlikely to do much because they're not going to want to put any money in the market until they've confirmation of the Fed rate. So it's either going to go or it's not this afternoon. And if it doesn't, I think we've got a quiet one until we get to Wednesday evening. So, and then obviously Thursday is just catastrophic movement all over the place with every single interest rate on the planet being released. So the only interest rates we haven't got are the Aussie and the New Zealand. Yeah, so we've got the US and the CAD obviously as well, but the CAD will move with the US. So we've got the US, then we've got the Swiss, then we've got the pound, then we've got the euro. It's just huge news coming up in the next 48 hours. But right now, as you can see, it ain't interested. So, morning, AJ. A propos market's not moving. What? What's a propos market? Is that a spelling mistake? And I can't work it out. A propos market's not moving. Since 2 weeks, I trade H1, M15, M1 mean reversion with only 0.1 ADR target and 0.25 ADR distance. Lots of trades so far played out. Very successful. Yeah. So, yeah, I mean, moving down time frame in markets like this, obviously you have the option to move down onto things like M15, and you are going to get extensions and, you know, plays. So you would have got in there, scaled in and got out, got in there, got out, got in there, got out. So yeah, I mean, that's an option. The problem you're going to find is if you start position trading M15, when the market moves, you're going to be in holy crap. And we will have seen 3 or 4 hour candles go past to hit 200 ADR, and you'll be in 5 positions in problem. So if you're going to do that, you're going to need to scale out pretty quick when the moves start. Because all an accumulation is a contraction in price, and it's an equilibrium or a balance, as they call it in the banks. So when you find balance, all it means is it's an area where the market is happy to conduct business for a period of time. When it's not happy to conduct business for a period of time, one of the banks will start a price discovery move. If that price discovery move holds and other banks decide they would like to have a bit of that action, you go into a big move, which is what we tend to get off the news. If you are short, let's say you go short here and you didn't get out and the price pushed up to there and you go short there and then price pushed up to there and you're short there, you're in 3 positions. Whereas if you're trading on the hourly time frame, we're not even short yet. So we will start getting short at a decent resistance. And that's the only danger you run. It's like trading anything. It's good until it's not. And the lower the time frame, the more chop you're trading, the more trades you're going to enter, the more risk there is when a move starts against you. I was worried about moving from H4 down to H1 initially because I've seen H1 squeezes and I've looked at H1 squeezes and gone, holy crap, I'm glad I wasn't in that on the hourly chart, because I got into it on the 4 hourly chart here. On the hourly chart, you got into it here. You were in that much more pain, twice as much pain, because you took it on the hourly and not the 4 hourly. Imagine taking that on the M15. You'd have been in up here somewhere. But right now, yeah, good thing to do. Markets are fractal. So as long as you're using multi-time frame analysis and you're using a higher time frame and a lower time frame for entry, you'll be fine. As long as you are scaling out. And, you know, if you're entering your moves still half an ADR to 3/4 of an ADR apart, even on the 1 minute time frame, you'll be all right. So, but a little bit more choppy. Which fundamentals should move the market most this week? All of them. Everything this week will move the markets. There's just loads of CPI and inflation. PPI is producer price index. That's related to the consumer price index. So everything that is a PI is a price index. So that's the consumer price index. That's the producer price index, kind of manufacturer's price index. So this is how much our goods and services at retail are going up. This is how much goods and services at manufacturer level are going up. These both feed into the interest rate decisions from central banks. So that will move the market, because if that comes out massively positive, they will assume that that will come out massively positive, because that knocks on to that knocks on to that. Everything moves. This is why these are all red, because they all have the possibility to move the market, but the amount of movement is dependent on the deviation. So if you are forecasting the price to rise and the market has priced in a rise and you get a rise, the market will do something like that because it's got it right. If that comes out as a massive negative, the market's got it really wrong, they will need to correct their positions. But everything will move the market. It's not down to what will move the market more than PPI, which does not move the market more than the interest rate. What moves the market is the deviation from forecast. So if that comes out as a 5.5, the market will or won't move dependent on whether or not it needs to and wants to adjust its positions. If that comes out massively different, a 5.25 or a 5.75, the market will not have priced that move in, and then you get that big movement. So if all of these come out as forecast, it may not do anything. We've just sit there all week. But you have to prepare for chaos, because if one of those comes out massively off forecast, the market will be offside. Then it will put a big move in. When that big move goes in, it will need to profit take that move. If the next news event means that they need to add to those positions, you get these huge rallies starting. That's why, because it's a knock-on effect. Then that one says sell as well, and they go, all right, we'll sell some more. Then you get them say, actually, we're going to keep the rates as they are, but in the statement and the press conference, they say, actually, the 5.25 is probably coming in January, not going to be March, April, or later in the year, as we said. Bang, it comes down again. Or you get this one going, holy crap, that was a miss. That means they're probably going to knock this down faster than expected. Then the PPI comes out as a massive positive and they undo that move. So all you get is no movement in the market, but a huge 200 ADR V-shaped recovery move, which is why I keep talking about V-shape and A-shape recoveries all the time. Market overreaction, market correction. Overreaction, correction. Overreaction, correction. Yeah. So all these movements are that you're seeing when you're in a range, then the market trying to get a new move started, but unable to, because there's not enough participants wanting to go out there, because their view on the market is we shouldn't be going higher than this because fundamentals say we shouldn't. And you'll usually find virtually all the banks will agree, which is why you get what we call balance range. There's no reason to go bigger or smaller in price if there is no fundamental reason to go there, because you're not going to earn more or lose more money by doing so. It's just simple economics. That's why this thing moves up and down. Which is why people that call these the fundamentals are in themselves mental, because if you don't follow these, you're not going to get anywhere in this industry, because you just don't know when the market's going to move. People constantly put in the Telegram group, why is the Swiss franc suddenly gone 200 ADR? Because the interest rate came out. How could you not know that? It's your job. This is why we look at this every morning. Your job is to track what's going on with these things which move the markets up and down. Very simple. You've got no idea where they're going to go. It doesn't help you by seeing them. You can have an idea, but at the end of the day, the market will do what the market will do. You've got no control over that at all. Amy, it's French. Means by the way. Ah, I see. A propos. By the way, market's not moving. Get it now. I don't speak any other languages. I did GCSE French badly. That's about it. Saw another YouTuber yesterday talking about MT4 licenses being pulled from unregulated brokers. Yep. There's a lot of small brokers and crappy brokers. You can't trade on MT4 anymore because they're crappy brokers. I keep saying it. There are a number of very big brokers out there that have been around for decades, who are big, well-established, regulated, reputable businesses. There are 150,000 small brokers who will steal every penny you have. Those are the ones, and this is why everybody keeps saying, oh, MT4 is dying. Everyone's going to stop using MT4. No, they're not. The crappy brokers are, because they can't afford the licenses and companies don't want to deal with them. Don't use them. Act Trader, Franco. Oh, is that move from MT4 onto the ACE? You're right. Okay, Act Trader. I don't know. I kind of have heard of that platform. I've never really looked at it. Yeah, I mean, basically, you've got to think about it. It's your business. So as a broker, your business is to get clients, take their money, and then replace those clients with new clients. That's what they do. If the largest trading platform on the planet pulls your licenses, you have no choice. And that is going to hurt your business because a lot of traders use MT4 and MT5. It's the biggest, well-established trading platform on the planet. So when you get that license pulled, it hurts your business. They don't want to not use MT4, but what they will do is they will spin it and go, we've decided to drop MT4 and MT5. No, you haven't. You've had your license pulled. There's all sorts of stuff going on in the trading industry at the minute. And lots of rumors everywhere, but I'm sure, software comes and goes, doesn't it? At the end of the day. So, this looks a little bit like, what did I used to trade with in stocks? TC2000 is the software I used to use. 2000 is the software I use for stocks. Now offering simulated trading for high schools and universities. Wow. Yeah, that's TC2000. God, this is slow, this website. Lots of little boxes all over the place to give you lots of information. That looks very similar, laying out lots of different stuff. Great for stocks. But yeah, you got to pick a software. There's a lot of software out there. At the end of the day, it all draws candlesticks. No matter which one you use, really. It's what tools. It's all about the tools. My tools are all developed for MT4 and MT5 because that's what I use. You don't have to use MT4 and MT5. You can obviously use anything. As long as your broker provides it and it gives you what you need, use it. EuroCAD running? Yes. But it's making market structure is very bearish at the moment. So we could well be putting in. Oh, look at that for a market structure lesson, eh? Look. High, low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. What's this, everybody? A downtrend. What I want to see now is a reversal and higher high, which means that is our new low. And then we put in a higher low and a higher high to get me above that green line so I can get out and go and have my Christmas. Excellent scanning capability, TCs2000. Yeah, that's why I used it. It's got great scanners. You can build your own scanners in it for stocks. Very good for finding gappers and runners and all sorts of stuff. The stuff you need in stocks. DAX, just not going anywhere today. If it does go somewhere, there's a chance of a move. But, I mean, the speed this thing's moving today, don't go for ridiculous targets. I mean, that propulsion gap really to the downside is all I would be interested in today. If you can get there, job done. Obviously, upside, there's a little bit more run upside because there's no resistance. So looks like we're nearly. Go on, you see, then buy that up then. That was a really good definition of an iceberg order. Yeah. Selling into it, someone just basically absorbs every order and then dumps a load more on top. No, you're not coming through. You can see it much clearer, all these big orders going in when the market's got no liquidity in it. It takes hundreds of thousands of dollars to make that tick. Someone's just pumped a load of crap into the market there, but we'll see. Might break down here. If so, that's my target. I'm not going for anything big. 1 and a bit R, if that, today. If it breaks. Other than that, we're not going anywhere, are we? Why did I stop trading stocks? Stocks you have to trade on 5 minute or low time frame. Basically, it's an intraday strategy. Swing. If you're going to swing trade stocks, there you go. Short on the DAX. If you're going to swing trade stocks, you need to make sure you've got a very decent amount of capital, because if you get gapped and you get a gap and run on earnings or anything like that, you're potentially going in the hole or into big losses. So it's a bit like slippage on stocks. When the stock market decides to gap up or down, there you go. There's a good example. Look. Yeah, if you've gone long in here and you've got a stop loss somewhere here, this thing gaps down, that's twice as much loss as you're expecting. Swing trading stocks, because stocks obviously gap all the time. It's part of the trading strategy I used to do, the gap and go. So you can't really hold overnight. So stock trading for me is all about intraday scalping, and it's hard work, labor intensive. You've got thousands and thousands of stocks. So you've got to, before the market opens, an hour before the market opens, you need to be scanning, doing analysis, looking at earnings, analyzing the companies that are gapped. Why have they gapped? What's going on with them? What are they likely to do? What plays am I going to plan out for those gappers? So you can only trade. There's no point in just trading NVIDIA every day. Yeah. You need to trade what has moved. So it's all stocks. It's all about momentum, stock trading. To find momentum, you need scanners. And that's why you need software like TC2000. And it's very, very labor intensive. So my day trading stocks would start at midday, 12 o'clock in the UK, 2.5 hours before the market opens. Have a look at the news. What's gapping? What's earnings today? Who's likely to move? What moved yesterday? Why did it move yesterday? What's it opening at today? So is there a play from a gap there that's come down that's going to reverse and go back to where it was before? What's overpriced at the moment? Has anything had a 6-day run? It's all work. It's a hell of a lot of work. When you compare it to position trading, where I get in the Euro CAD last week or wherever it was and go, I'm going long, and just wait for the market to do something. There's absolutely no stress involved and no work involved. It's just, stock trading is hard work. Good reward, very much like the stock indexes. Yeah, I mean, this is why I trade the SIH strategy. This is a variation of a strategy I used to trade in stocks, called the ORB, opening range breakout strategy. It's a very well-known strategy, but it's a momentum strategy. Everything in stocks is momentum based. If there's no momentum, it doesn't work. I mean, look at that. We've gapped on a 5-minute candle. We haven't gapped because there's a hell of a lot of sellers coming in. We've gapped because there's nobody in the market today. So these guys that wanted to enter a load of shorts, there was no one wanting to buy at that price. So we had to push down further to get a buy order in. Momentum trading doesn't work with no momentum. So your job as a stock trader is to use things like TC2000 scanners to find momentum. It's all about momentum. 10 minutes after the open, who's moved more than 2% today already in 10 minutes? Okay, there's volume coming in here. What happens with volume? Typically it fades. So we wait for a fade signal and we fade it back down to the volume weighted average prices, all that sort of stuff. It's incredibly complicated. Too much work. So I didn't do it. I stopped. I switched. Trade Nation. I really like Trade Nation. The provider's 2D365. It's them. Bulls on Wall Street. Understand why you no longer do it. Completely different. Yeah, it's a very, very different. So Bulls on Wall Street is where I learned to trade stocks with Canal Desai. Shows you how long Canal Desai's been around. I've been doing this 15 years. Very, very well, very experienced trader. But yeah. You see, trading's a mindset. So you've got different types of people. This is why no one will be able to trade the same strategy. If you give the same strategy to 10 traders, you're going to get 10 different results, not because they will execute the strategy badly or better or worse than any other. It's just that some ways of trading will click with you and they won't click with me. Kunal's been trading stocks for 20 years. He loves it. He's energetic. He's on it. I'm not that type of person. I'm much more methodical, logical. I want statistical, mathematical edges. He wants Nvidia's pumping, put some more in, that type of trader. It's not me. Some people are like that and they will click with that type of trading and they will be a stock trader. Others will do that and go, Jesus, this is just hectic. And they will want to swing trade hourly and 4-hourly timeframes on Forex. Others will move over to commodities or trade bonds. Bonds, it takes for the bond market to move one tick. You'll be sitting there for an hour waiting for that tick. And then you'll be looking for another tick 2 hours later. Some people want to trade bonds. Bores the crap out of me. But you've got to try everything, because until you try it, you've no idea. Like TC2000, if you want to trade stocks, you're going to be using something like TradeStation, TC2000, Rhythmic, all those sorts of softwares. You might open up those softwares and go, this is so complicated. I'm going to use MetaTrader because it's really easy. If you're going to use MetaTrader, you're not going to be trading stocks. So you might be driven into the type of trading you do via the software platform. There's all sorts of things. You just got to try everything. But, you know, like I said, swing trading stocks, I loved it because it was slower and easier to do and easier to read. But my God, when you got gapped, you got hurt. For me to swing trade, I'd have to take such a tiny position so that if it did gap down by, what's ADR on this? 117. So if it did gap down by 20 ADR, that intervention move on the US dollar yen was 8 ADR. That's 20 ADR, right? And it did it twice in a month. Yeah. No, sorry, in 2 days. This is a daily chart. No, that can't be 20 ADR, is it? Sorry, I'm talking rubbish. 2.5. So that's 2.5 ADR. Sorry, I was going to say 20. A lot. But yeah, gap down by 2.5 ADR. Can you imagine going into drawdown by 2.5 ADR in a position? It either hurts or you get into massive drawdown that you've got to try and recover from. So if you got that massive bull run there and you faded that flag and bought it, just got hammered. Yeah, so but some people thrive on this and use it as a position trade. There's 1,000 ways to make money in this market. Basically, at the end of the day, if something goes up and down, you can make money out of it. You just need to have a strategy for that market and for the way that market moves. Everything's got a personality. Everything moves differently. Yeah. Gold. Yeah, gold has these tantrums. You know, you need to know that the tantrums are coming and adjust your sizing and everything according to the tantrums that has. Euro pound doesn't move. So you need to adjust your approach to Euro pound to that instrument. Everything's got a different ADR. Everything's got a different characteristic. Stocks have got a different characteristic to FX, which got a different characteristic to bonds, different characteristic to commodities. Everything's different. But everything moves. And as long as it's moving, you can make money, even if it's moving this slowly. You know, we're making money at the moment, not anticipating making a lot of money, but what's my take on US dollar yen? Sell. Everything yen is a sell for me at the moment after this bull run. The US dollar is going to weaken and the Japanese yen is going to power up, basically. So we are reducing interest rates on the US dollar, which is going to weaken it. And the interest rates are going to flat for the first time in 6-7 years on the yen from a negative 0.1. So that is going to power up the yen. As you can see, this is all speculative. This move here is speculative buying based on that yen interest rate rise. Then they came out and said, yeah, we're not doing it in December. And the market was like, oh, well, it really knew that already, but it's undone it into support. I mean, remember I said yesterday, look for support bounces, previous support, stroke resistance. Yeah, so we should be selling everything at the moment. But that doesn't mean this week, this could get up to here. Because if the US dollar news all comes out as positive, they're not going to sell the US dollar dramatically. So, you know, you could have that. And we are also due a massive correction on these indices. Don't forget that. These stock indices are parabolic. Yeah, they need a correction. And if they correct, the US dollar has to power up because the money pulled out of the stock market goes into the dollar and vice versa. Yeah, when the stock market rallies, the dollar drops because you're using the dollar to buy the stock. So this is due a profit take stroke correction move at some point, which will power up the US dollar. And it could well be this week. We normally get a Santa rally, yeah, but we don't normally get a rally for an entire month into a Santa rally. Last year, we got a Santa decline. And it all starts this week. So, you know, it's just one of those weeks. It's just impossible to forecast anything. There's too much news going on. Far too much news. Would the same hedge ORB strategy work on volatile stocks? All stocks are volatile. This thing, stocks, you trade the stocks. The difference between trading FX, for example, is we've got 28 pairs to trade, right? There's 28 pairs. We trade at 28 FX pairs, majors and minors. In the stock market, you trade what's moving. Okay, so there's 2,000 stocks in the Russell. There's 100 in the NASDAQ. There's 500 in the S&P. There's 30 in the Dow, yeah? So you've got nearly 3,000 major stocks to choose from there. You can't trade all 3,000. And NVIDIA might sit there and do nothing for 3 or 4 days. There's no point in trading NVIDIA. So what you do is you have scanners set up and you look for what is moving. And if there's a small cap Russell 2000 that sits at 1,500 on the stock index that has suddenly gapped up 5% at the open, you trade that because that's moving. So you've got to find the volume and find the volatility. This is where heat mapping comes in. So things like this. So you'll look at, I don't know if my internet's slow today or something, but so you'll look at things like this, like a sector heat map. This is the spiders, S&P. So what's moving at the moment? That is, yeah. So we're looking to buy healthcare today. Yeah, it's gone up 0.6% so far pre-market. So, right, let's look at the healthcare stocks. Which of the healthcare stocks are moving? And you'll make a short list. And then you'll have on your screen 10, 20 stocks that are moving. And you'll look for patterns in them, which will be VWAP, fades, fizzles, all sorts of stuff. There's all sorts of strategies, opening range breakouts, fades. There's a set number of strategies. There's a set number of things a stock can do. When the stock moves, it does one of two things. It goes parabolic. Yeah, if it goes parabolic, you're looking for flag breaks. You're getting in on every minor pullback to 23 retracements on fibs, stuff like that. Or it's going to push, exhaust, and then recover. You don't know what it's going to do, but it's either going to do one of those two things. If something has got momentum for a reason, which is usually a fundamental like earnings, they've got a new product that's just been released. Think Apple. Yeah, Apple announces new iPhone will be released in December. What does Apple stock do? Go parabolic. What do? You wait for a flag break and you buy it. You wait for a flag break and you buy it. You wait for a flag break and you buy it. But you only do it because you know Apple's going up, because you've got scanners and software telling you to trade Apple today. You don't trade Apple every day, because the rest of the time Apple will be going like that, because the stock is at the price which is deemed a nice area of balance for the market to trade Apple at. See what I mean? There's a hell of a lot of work involved in stock trading. It's not looking for bullish and bearish engulfings. It doesn't work that way. It's a complex machine. So you've got to trade what moves. So yes, volatile stocks will work with the ORB strategy, and they will work with hedging. But you've got to find the volatile stock first and then apply the strategy to the stock. So something that's moved, right? For example, I had a scan set up on TC2000. Anything that is up more than 5% on the day by 1.5 hours into the market session, yeah, I want to scan for that. Why? Because if it's moved up 5% and we're an hour and a half into the session about to go into lunch, what's going to happen to momentum? It's going to drop. What happens when momentum drops? The market corrects. So what am I doing? I'm looking for fade plays on anything that's moved up 5%, 1.5 hours into the market. And I'm watching those charts on 5 minutes for market structure reversals. Yeah, but I've got to be able to see these stocks, and I'm not going to know what these stocks are. You've got to be quick. It's complicated. It's very, and that's, I mean, for some people, that's exciting and wow, really want to do that. Other people, it's like, that's a lot of work. I was the latter. Easy life. There's a lot easier ways to make money. Euro pound rallying. Euro is on a run at the moment by the looks of things. We're buying into tomorrow, into Thursday, or the pound is dropping. A little bit of a combination of both by the looks of things. Bit of a weak pound this morning, and Euro's having a bit of a rally. So Euro pound being the combination of that being weak and that being strong at the same time gives you your ADR at resistance. We've got two propulsion moves at 125 ADR and 175 ADR. So watch that for shorts. Again, this is partly why I built these products. Yeah, this is why I built this dashboard. This is very similar to stock screening in the fact that I'm looking for stuff that's moved. Why? Because if it's moved really hard, there's a reason for it. So it's going to do one or two things. It's either going to stop, push again, and then have to do a profit take move, or it's just going to fade. So we use this to go, right, euro pound rallying. Is there any reason why the euro should be this much stronger than the pound today? Yes, because the pound's unemployment figures have just come out. Other than that, no. So probably nice little reversal alert. Let's see if we can fade it back down into recent resistance. Scalping. It's all about scalping though, which is on 5-minute time frame, which means you've got to be sitting in front of your computer all day. Not much fun. Well, I don't know. It's fun to some people. This is why everybody thinks trading is exciting. And then you see me come in here every day and going, there's no ADRs to look at. There's no RSIs to look at. The DAX isn't moving. It's not exciting at all. Boring as hell, which is why I do this. Because otherwise I'd just be sitting here talking to myself. Trade the FTSE 100 stocks. Day swing, the FTSE, your position approach is completely new start. Yeah. Different. Got to be different. If you do everything everybody's doing, you'll never make any money. Morning outro. FOMC Christmas party. This will be them two later. Decision week for indices. All-time highs in play. Yeah. That'll be them after. He will be a couple of tens of millions richer. He'll still be shooting people. Thank you for subscribing, Eri Forex. Welcome aboard. Blimey, chat's busy today. I can't keep up. Does VWAP work on Forex? No. Because VWAP is volume-weighted average price, which moves on volume. There is no centralized volume in Forex. So a CFD is a contract for difference, which is what you trade with your broker when you're trading things like this and you're trading FX. So there is no, when you look at the volume on your chart, you are seeing the volume provided by your broker. Yeah. So all indicators that work off of volume, like the volume weighted average price, works from the volume of your broker. Who's to say that the volume going through your broker is what's going through the market? If you're trading with a broker that owns 1% of all clients trading Forex, that volume is based on 1% of the market. Yeah. Volume weighted average price works in stocks and futures because they have centralized exchange for all orders. So every order you place on the NASDAQ goes through the Chicago Mercantile Exchange, every order. So you see the exact volume moving through the market. So you can see what the exact volume weighted average price is of that instrument. You can't do that in Forex because everybody in Forex will give you a different bar of a different height based on their customers. If you've got a broker that's only got 10 customers, that's got absolutely nothing to do with what's going on in the market. So you can get aggregated volume indicators, which will aggregate volume from all the big brokers, which is closer, but it's a stock strategy, really, VWAP. You can get VWAP indicators, but as I say, this volume, the spikes in volume will be similar on most brokers because you will find people buying and selling at the same time. It's the herd mentality. It's what happens. But the actual volume weighted average price is based on the actual volume. And because you're only seeing a tiny bit of the volume, you can't use that as an indicator. It doesn't work. But for stocks, it's brilliant. VWAP bounces is something we used to play all the time, and VWAP fades. So say that is the VWAP. Yeah, price will bounce off of VWAP because that is the average price that the market has been traded at this day. So if you think about it, all it is another 50-50 shot. This is the average price the market wants to maintain for the day. So the idea behind the VWAP bounce is when we get back to the average price and we've been pushing, the market says, I want to be long on this today. If we get back to the average, the theory is that the people that wanted to go long will add more into their positions, and they just work. But when they don't work, they don't work. It's the same as any moving average. It's the same as any bounce play you play. It's exactly the same as a Fibonacci. Yeah. Could bounce off of any of these, couldn't it? That's a 38. That's a shallow pullback. Absolutely fine for a bounce play. That doesn't work. That could be the bounce play. If that doesn't work, that could be the bounce play. That could be the bounce play. A bit like the gator, you know, the moving average indicators where there's multiple moving averages on the chart. All that's saying is these are levels that it could bounce from. It could also just slam straight through them. The odds at every level are exactly the same. It's 50-50. It either will or it won't. Nothing works better in stocks than it does in FX or any other thing. It's just a different strategy. This isn't doing anything today. I'm tempted to just scrap it. I'm worried about this, you know, just getting that sort of day. In a hedge, isn't it? Back in the day, I used to trade purely earnings reports. Yeah. So again, the gap plays are typically earnings plays. So you scan for all stocks that have got earnings, and then of those stocks that have got earnings, you scan for all stocks that have gapped up more than 1.5% at the open. If they've gapped up more than 1.5% at the open, what's going to happen? Yeah, we're either going to get a gap and go, or we're going to get a VWAP fade, which will be a gap fill. What's the odds? Nothing different. All you're doing is you're saying, this is the play on this instrument. So yesterday, the play on this instrument was the gap fill. That trade worked. You just had to find where to trade the fade, the double bottom bounce. That was the most obvious trade yesterday to take back to the gap fill. In hindsight, it's obvious. At the hard right edge, when that candle closed, which basically formed a bullish engulfing on that previous 5-minute candle, that would have been your long entry. That would have been your stop. And you would have got somewhere in the region of a 3R out of it. Yeah, it's exactly the same as stocks. But this is the problem with it. You're always working risk to reward in stocks. And I hate working risk to reward as well. It's difficult to do. I'd much rather just be in something and wait for the swings. And if it suddenly spikes and makes me a load of money, brilliant. Different. Yeah, and as Outro's just said, traders that use market profile on FX charts, there's people that have introduced, have built and sell indicators to trade volume profile in Forex. You can't. There is no volume to measure. All you're doing is you're measuring who's placing orders through your broker. That doesn't tell you whether or not the market's going to react at a point. It's just pointless. But people that don't know it will just buy it because it's different. You're going to trade it in stocks, it's massively impactive. But I don't know why I'm looking at US indices. The market's not even open. Sleep deprivation. Yeah. Don't look at the US indices, Brian. They're doing as much as the UK markets at the moment. This is the Globex session. It does not move. Yeah, and as Alto's just said, a 5 billion hedge fund isn't going to use a retail broker, so you won't get the volume. You will still have, it still does. You'll get the spikes. Like I say, that spike there at the open tells you that is when the market opened. But the volume there is all a volume bar is the volume in that candle compared to the volume in that candle compared to the volume in that candle. So that could be 1 order, 4 orders, 3 orders, or it could be 100 billion, 300 billion, 200 billion. So, it does help you because it tells you where there's more people getting involved in the market. It doesn't obviously tell you direction volume, but you can get that in stocks. Again, it's all much more useful, that information in stocks and commodities and indices. Futures indices. Aussie dollar, US dollar, 4-hour and daily retest short. Is it? Yeah. So basically, it's an accumulation. So you've got a reversal alert, which is retested, giving you a short signal. And you've got a reversal alert, which is retesting, giving you a long signal. Not going anywhere, basically, is what it's saying. We're in accumulation. But we're bullish. So that would have been the best reversal alert to take and retest. But 1:30 this afternoon, it's all gone out the window. XRupdate.news late again. I think today's going to be a reload day. Parabolic Mondays aren't that common. It's Tuesday, Brian. I know it's early, but you're on the wrong day. Tuesday. Well, it is in the UK. It might still be Monday in America. I don't know. No, it's not. It's definitely Tuesday in America as well. Wednesday in Australia, probably. I don't really want to be involved in this today, I don't think. At $54. I'm just going to... There's absolutely no volume here, and I don't think we're going to get any until 1:30. So what I'm going to do is I'm either going to get out if we break back up inside the opening range, the pre-market range, and the opening range. It's the same thing today. There's your pre-market range and there's your opening range. It's just that, basically. If we break back up inside there, I'm going to jump ship and just take a $100 loss today. We have broken down, so I'm going to give it the benefit of the doubt that we're going to accumulate and slowly drop, in which case I'm targeting that propulsion gap and no further, which is basically that support. There we go. It's probably going to make my decision for me now, because there's just no volume. It's literally, it's a fluke if it goes that way, and it's a fluke if it goes that way, basically. So there's nobody driving this today. It will go wherever the maximum volume is. And if there's more shorts than longs coming into the market, we'll be down here. If there's more longs than shorts, we'll be back up here. But we're not going anywhere until 130. So there's no point trying to trade it. It's dead today. FX, the only mover we've got is euro pound at the moment, which is approaching 125 ADR. So that's coming up into propulsion, which is that area there. So that previous support, term resistance, we broke that level. So we know that there's a second batch of sellers entered the market there. We've got the main batch of sellers out of that accumulation started here, 175 ADR. So we could find a pullback down into there or that sort of move. However, this is a 7-day breakout. 1, 2, 3, 4, 5, 6. 6 days of accumulation we're breaking out of here. So this is either going to be a false breakout or it's going to break out and run, in which case it's going to run straight into sellers who are going to stop it in its tracks. So, I mean, you see how much this euro pound moves. Its ADR is 34. This is the euro CPI numbers and them saying that they're going to drop their interest rates faster than expected. We've got the rate coming out this week, and we've also got loads of pound news. So again, we're moving, but whether this does that or that Thursday is going to be completely down to all this news coming out. So anything you get into, this is a technical analysis. We are using a technical indicator to say this has moved almost 125% of its average daily range. If that news comes out, it's got nothing to do with any technical whatsoever. The fundamentals always trump the technicals. This is a technical breakout into inflation figures for the US this afternoon. So it will or it won't. It's like I say, it's not really something you want to get position trading on at the moment. But for a 5-minute reversal alert, when we do break that last sell order at ADR there, yeah, try and get a little bit of a scalp out of it short. But other than that, that's it today. Nothing to look at, is there? Not going anywhere. Brian, are you tired? Yeah. Still Tuesday in Australia. It is just about. Probably. Yeah, still about, it's about 9 o'clock, isn't it? At night, or 10 o'clock at night or something. I was referencing yesterday's price action. Oh, I see. You were talking about yesterday. Yeah. Parabolic Monday. Wasn't that parabolic, was it really? Look at it. Euro US dollar wasn't parabolic. Indices. Well, indices, yeah, I mean, indices were a bit. It's all a bit meh at the minute. There you go, stopped out. I'm just going to close that second half. $137. So just, I'm out. I'm done. This thing's just going to do this. We're in rotation until 130, so it's just not worth trying it. It'll be one of those, you'll get a signal to go long, then it will go short, then you'll get out your long, you'll get a signal to go short, you'll go short, and then you'll get out your long, your short, and you'll just hemorrhage cash. Come back later. We'll see if we can get something out in New York. Euro pound 125, not on mine, but close. Like the old bloke who turned up at the doctor's and complained about the delay in the doctor seeing him. Doctor said, yes, but it would be okay if you turned up on the right day. Going to be one of those days. Yes. Day of chop. So yeah, I'll be back this afternoon at 2:20. We'll see what goes on then, but there's nothing moving today. So again, you get days like this in stocks as well. You'll be sitting there Like all your gappers will gap and then they'll go like that. And you'll be like, oh, God's sake. Same, all markets are the same. Doesn't matter what you pick. Like I said, something goes up and down, you can make money. You just need to figure out and formulate a plan to do that. Just pick the setups. Don't pick stuff because it's there. Pick it because it's set up. Great price action on the 30-second chart. I bet there is. I bet there's a lovely spread on the 30-second chart as well. I haven't got a 30-second chart, but there's a 1 minute. Look at the gaps. Look at the gaps on this 1 minute chart. Look. This shows you how little volume there is. Look. We're gapping. There's no volume. So the seller here went, I want to sell short. And they went, nah, no one wants to buy. What about here? Nah, no one wants to buy. What about here? Yeah, I'll take one. All right, I'll take your one. Anybody got any more? It's just pointless, absolutely pointless. There is just no volume. So this is why you're going to get this sort of movement, because there's no volume. If you do want to sell some stocks, you're going to have to find some buyers and you're going to have to move further to get them, which means you get these big candles, which look like they're bullish and bearish price action signals. They're not. They're just the market trying to find someone to fill the bloody order because they've got an order book on their desk and they need to fill them. Please, somebody, anybody, take my order. Doesn't matter what price it is. I just need it off my desk. Basically what they're saying in the banks at the moment. Frustrating as hell. Bit of humour. The seven dwarfs are sitting in the field. Wayne, that didn't work. The seven dwarfs are sitting in the feeling happy. So happy got out. I think I kind of get the joke, but I don't think the delivery was quite right. I think that's probably an autocorrect. The seven dwarfs are sitting feeling happy, so happy got out because happy didn't want to be felt. I think that's what you're saying, isn't it? Sitting in the bath. Right, so you missed the bath bit. Seven dwarfs sitting in the bath feeling happy, so happy got out. Yeah, one of those days. This is what Christmas parties were invented for. There's no work to do. Let's get drunk. Right. I'm just managing EuroCAD still. I'm not going to do anything on this because it's not moving until it moves. So nothing banked Friday, nothing banked yesterday. I'm not taking any new positions. So if something moves, jump on it, basically, and hope it moves up or down. All right. So out of the DAX. Anything you need, let me know. I'll be in Telegram. I'm going to do other stuff and then come back at 2:20. So 1:30 this afternoon is your news. We'll have a look at that this afternoon and see what the CPI figures came out and see what it's done to the market. And then I will look at the market and see if I want to trade New York. If we've got an ADR move already, I might give it a miss. Or I might actually just reduce risk dramatically based on that movement. But I'll have a look at it later and see what it's like. But minute we're just sitting there watching paint dry. So all right, have a good day. I'll be back 2:20 this afternoon, back tomorrow morning 7:50 for the Frankfurt session. Anything you need, I'll be in Telegram. Other than that, I will see you guys next session. Have a good one.